You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here one final time for you on-demand folks here on the network. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so around these parts, Options Insider Radio Network. You're listening, so I have to think you probably agree. If you like what you hear, do keep rating and reviewing on whatever platform you're listening. It is available pretty much everywhere these days. It does help all the new folks who we're seeing. They continue to flock into the network month after month. You folks and your ratings and reviews have a lot to do with that. So keep it up if you like what you hear. Of course, if you like what you hear, you want to go above and beyond. You don't want your broadcast week to end after Volatility Views. You want more in your life? Well, we got you covered. You got Options Oddities coming up after this. We had just a great discussion with Scott Nations, the creator of VolQ, one of the vol products we talk about here on the network every week. That was on our Pro Q&A. You want to get access to that, to Options Oddities, to go live for this and every other show we do throughout the week. Giveaways, a whole bunch more. TheOptionsInsider.com/pro is the place to go to begin that journey to the dark side. But be warned, you'll get sucked down the rabbit hole and you won't want to come back. It's a fun time. And of course, keep those questions and comments coming. We do love to hear from all of you folks out there. And let's see who we're hearing from on the old program today. First, let's go out to the Southern Volatility Mecca, once again known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Good to see you, Mark. Glad to be here. Lots to discuss in the world of volatility. Can't wait.
Lots to discuss. You can see me. Did you plant a camera in my studio again, sir? Did you do that again? We had this discussion last time.
Yeah, I did. I've got a nanny cam on the Goliath that is the Option Insider.
Yes.
News headquarters.
I always get a little nervous when you're somewhere here in the Chicagoland area because I know something shady is afoot, and I can see once again you have planted your eavesdropping devices. But we don't have to eavesdrop to bring on our next guest. He woke up bright and early for us. He is beaming in all the way from across the pond the other way, the real far pond. Yes, we're beaming out to Australia. Once again, we are joined by the Spikes father himself, Mr. Simon Ho from T3 Index, creator of a few products you may know and love, like Spikes. Mr. Simon, welcome back to the program. Sir, it has been too long.
Thank you for having me, Mark. It has been a while, so my apologies for that.
Well, we'll make up for it. We have a lot to talk about today, so let's get to it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we break down the week that was and indeed still is from about trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the start of the show, we're seeing a little bit more vol back on the screen. So all those heady days of VIX and spikes below 20, they are gone. They're in the rearview mirror. I'm just kidding. But we are north of 20 again in both of those products. VIX, when we kicked off the show, 20.5. Spikes, that puts it up about 1.25 points. And spikes, when we kicked off the show, about 20.75, up about 0.75 of a point. What's driving all this vol? Well, of course, a little bit of the sell-off out there in the broad indices today. S&P off a little over 1%. The Dow a little over 0.5%. And the NASDAQ closing in on 2%, about 1.8% to the dark side. So we can't rally forever, at least today. But, of course, these markets are fickle. We're about 4240 or so right now in the S&P. There seems to be this strange attraction to the 4,300 levels. Who knows? By the end of the show, we could be rallying right back up there. You never know. These markets are crazy. That means vol, we're seeing pretty much hanging out about the same level it was this time last week. VVIX is unchanged at about a 90, exactly where it was this time last week. And the Viking, a.k.a. VSPKEX, at about a 104.5. That puts it up about 1.5 points from where it was this time last week. So a lot to unpack there. But before we get to any of that, listeners, before we dive into what's lighting up our tape from a vol perspective this week, we have to kick things off. The big news, finally, they are here, listeners. We've talked about them. I've lost track of how long now on the show. Many months for the big convexity shares spikes ETFs. They have finally launched. They are finally live. So let me first say, Simon, I know it has been a long road. Congratulations, sir. You must be very excited. Must be like birthing children.
Well, I don't know about what that would be like. Other than I can try and, I don't know. It's been fantastic. I mean, yesterday was a seminal day for us. For those who don't know, we with a project between T3 Index and MIAX, we put together a company called Convexity Shares. And Convexity Shares is two funds that we launched yesterday on the NYSE Arca market. They really looked after us very well, and it was a fantastic sort of bell-ringing situation. So really very, very impressed with them, and we're obviously super excited that finally we can bring to market some ETFs. So the first two ETFs that we are launching, as I said, have happened yesterday. And we're very much looking forward to chatting with you and your audience about their thoughts about the index. But we're very interested. Obviously, we're very super pleased about the fact that we have launched these after such a long while.
So Tom was on the show last week. He mentioned there might be a bell ringing. So you did get to fly in and ring the bell then. So that's fun.
Yes. That was a highlight. It was good fun.
I know last time I talked to you, you said you had kind of sworn off the, 20 plus hours, whatever it is, the flight you have to do to get over here. But it sounds like they twisted your arm to come back. So this was worth doing.
Absolutely, yes. It was fantastic.
Well, I'm glad you made it back here. So let's get into a little bit. Some of our listeners, like I mentioned, we're just coming off the hottest month yet again in the history of the network. So there are clearly new people listening every month who have no idea what the heck we're talking about here, Simon. They haven't been here for the long saga, the long journey that is the birthing process of these ETFs. So what are we talking about? What are these convexity shares ETFs? What can I go trade if I wanted to?
Well, I'm very glad that you asked. So we have, as I mentioned just before, we set up a company called Convexity Shares. So if anybody wants to get more information about it, you can go to convexityshares.com. From there, you'll be able to have just a whole bunch of collateral that you can look at, and it'll give you a lot better example or a very clear example about what it is that we're doing. So we have launched two ETFs. Basically, these are benchmarked to the T3 Spike 2 futures index, so pretty similar to those that already exist in terms of their construction. Obviously, the very big difference here is that we are using spikes as the volatility driver, as opposed to a competitor. So super excited about it. In terms of the types of funds that we're doing, we have a one-time fund, basically one-time spikes futures ETF. The ticker there is SPKX, and we also have another one, which is maybe for those who are a bit more adventurous, where we've got a convexity shares daily 1.5 times spikes futures ETF, and that ticker is SPKY. Very pleased with them. I think that this is going to be pretty interesting for people. And we also have expense ratios that are kind of the lowest in the market, 0.65 for the SPKX and 0.79 for the SPKY. So super excited about what's happened here. We've had such fantastic help within the team to get it done. And although it's taken nearly 2 years, it's certainly well worth it.
Yeah, you thought I was joking earlier, listeners. This has been quite the odyssey, the saga behind the scenes to get these to market. So, I mean, obviously, it's only been a day or so. You're probably still exhausted from flying in just to ring the bell. But who's trading these? Are we seeing some volume?
I think it's probably a little early, simply because the thing only launched yesterday. We're very positive about the impact that this is going to have. But right for now, we have had some flows coming in. We've got our market makers are doing a wonderful job. So we're very pleased with how it's gone, but I think it's going to take a little longer for us to accumulate AUM.
I can already see the nicknames coming. I can already see our friend the Meatball calling one of them Spikey. We have the Viking. Now we have Spikey, Simon. So thanks for adding more nicknames to our volatility lexicon. We didn't have enough, Simon.
My pleasure.
Well, Mr. Meatball, I know you've been busy over there watching an interesting ball week. Have you had a chance to check out these new ETPs? And if so, what are your thoughts, sir?
No, I have not, but I'm really excited to check them out. What are the symbols again? Just so for everyone in the audience, not me.
Yeah, so SPKX is the one time.
SPKX. Yep. All right.
The second one is the SPKY.
Let me take a look here.
Which we will know on the program going forward as Spikey. So just prepare yourselves.
I'm a big fan of Spikey, and I really like I like the way these look. Spikey.
Thank you.
Yeah, Spikey. I like it. Nice tight markets for a brand new product in Spikey. And then in SPKX, SPKXy, again, really nice tight markets. And these should be interesting. I'm excited to trade these and can't wait till they list options.
Well, Simon, you're a product guy. I'm sure you have a lot of listeners who want to know, why did you go this route? Why go the 1X and then the 1.5X for everyone's favorite Spikey? Why'd you go that route?
Yeah, it's quite contentious. So as I mentioned earlier, this has been more than a 2-year long experiment, and over time, it comes into your mind. Well, what the heck is going to be most interesting for people? For example, what is it that the market needs the most? And so there's been so much back and forth about this, and obviously there's a lot of things that are out there, but I think we wanted to sort of row a slightly more cautious approach, I suppose, because you have a lot of other funds that obviously have a purpose to serve as well. I'm not saying anything otherwise, but we decided to take a risk profile that was sort of very, I feel like it's very contained, So there are some other funds which are more aggressive, and of course, there are going to be people who prefer those. But in this case here, we are launching ETFs for the first time, and we wanted to, as I said, row that sort of more cautious route. So I'm very happy with these. I think that especially, we've got really good expense ratios and stuff. So I think this should be somewhat appealing to a big audience of volatility enthusiasts.
Well, I know people have been waiting for this on the futures and options side for some time. We've said it many times on the show. There's this three-legged stool that really creates the ecosystem for these products, listeners. It's the futures, and we have those. It's the options. We have those. And the other leg that we've seen, especially in the vol space, that tends to drive a lot of paper, a lot of volume, tighten up markets, is the ETPs, and those have been missing. We finally have those now, Simon. So I think going forward, I know I'm kind of excited about what the impact these will have going forward on options volume and on the futures volume. I have to imagine, as the product guy yourself, you're somewhat optimistic yourself, Simon.
I think so, yeah. I mean, we've put so much time and energy to making sure that we're making the right decisions here. And, well, all you can do now is row the boat out, and that's what we've done. But I'm pretty confident, actually. I think we put in the work that we needed to get to a point where this could be very interesting for people.
And Mr. Meatball asked the $1 million question there. People always want more, Simon. You just listed the products yesterday, and people already want more. So I know our audience is going to ask, so I'm just going to head them off at the pass now. We have the ETPs. When are we going to see the options, sir?
Actually, you won't have to wait too long for that. I can't sort of give you much more than that, but certainly interesting.
All right, so your Spikey options coming post-haste here, listeners. So look forward to that, Spikey, and we got to come up with a Mr. Meatball. We need a good nickname. We can't really call the other one Spikes, because that's kind of already taken. So we'll have to come up with a good nickname for the regular vanilla flavor, the 1X one. But there you go, listeners. And a lot of you have been asking, what's the latest? What's the status? When are we going to see these? Well, you could see them right now. You could trade them in your hot little hands if you are so inclined. And if you're waiting for the options, which I know many of you are, sounds like you don't have to wait too long. You don't have to wait too long for our vol breakdown as well. Let's get into some of the action from this week. Mr. Meatball, an interesting week, kind of a crazy week. It seems like, we were hanging out below the 20 handle for most of the week in most of the major vol products. In fact, that is our question of the week. We will get to that a little bit later in the show. Outside of today being the outlier where we are back north of 20. Well, what was catching your eye out there in the vol space this week, outside of the much ballyhooed launch of Spikey?
I think, and I know we're going to talk about the futures curve here in a little bit, but I was looking at SPX and SPY and how cheap near-dated straddles are, despite the fact that we've been getting really nice intraday moves. The 30-day implied is too high, but near-dated vol has been really inexpensive. And you're saying, well, Mark, what do you mean by that? Well, the straddle that expired, yesterday we settled 42.85, right? Right about there. Call it 42.85. And 42.83.74. Close enough for government work. And the PM settle at the money straddle in SPX for that strike went out way too cheap. And I'm going to give you the price here. That straddle went out for $30, $31. So they were pricing in less than 1%. And we've been seeing 1% days all the time. It's amazing, right? You go out to September, October, and implied vols in the 20s, but you get to stuff expiring today, tomorrow, Monday, and the premium sellers are just after it. So it's been kind of fascinating to kind of watch, and that's kind of been the one thing. The other piece has been the resilience of Apple and the way that has basically held up the market until now. And I know we don't do too much crypto, but boy, Bitcoin is. If you and Simon, this is maybe you can speak to this because I know you do Bitvol as well. I was talking to my lead technical analyst, and she basically said that if you want to know when momentum is shifting for the overall market, watch Bitcoin, because Bitcoin is a really good momentum leader for the S&P 500. When Bitcoin starts falling, the S&P is going to follow. When Bitcoin starts to rally, the S&P is going to rally. So she's basically pointing that Bitcoin has turned into kind of a leading indicator for the S&P. I'd love your guys' thoughts on that, but that was something that's kind of struck me when she brought it up, and then I looked, and it really does look like it does.
A lot of our guests have referred to crypto these days on the Crypto Rundown program as a high beta tech allocation, and that certainly falls into that conversation of moving aggressively with the market. I know, Simon, you've been dipping your toes more into the crypto waters of late. Of course, you have BitVol and all the other indicators you have over there. I know that's been luring you slowly over there to the dark side of crypto. What do you think about this growing correlation, or the fact that perhaps, dare I say it, is crypto now the leading indicator for the S&P, sir?
Oh, I guess I wouldn't go that far. I do think, though, that I think it's a very good instrument for people who want to gauge it, because I mean, as we know, I mean, we've had a crypto winter for the last several months, and the fact that it is starting to rally is quite interesting as far as I'm concerned. I mean, whether it's one leading the other or not, I'm not quite sure, but certainly the way down was driven obviously by the blowout in crypto, and so I don't see why the indicators wouldn't be doing the same here for the move upwards. So yeah, I'm kind of inclined to agree with Meatball.
All right, Mr. Simon, I know you're exhausted from your trip in and the launch of Spikey and its brethren there, but aside from those, what else is catching your eye in the world of volatility this week, sir?
I kind of agree with the comments that were made before. I think that volatility is probably on the low side. And so, I mean, from my point of view, I think I'm a better buyer than I am a seller at this point.
Well, let's get out into the vol space, see what else is lighting it up. Let's get out to the vol products. We were just talking about some new ones. Let's get into the futures and all things going on in the vol surface. Mark, you're just talking about this. You know, people have been asking me all week about, my thoughts on market valuation and different levels and things. And I kept coming back to this. I kept coming back to the one indicator that's kind of giving me the most pause right now about where we are from a marketplace and valuation level. This is the vol surface. We're seeing some of the steepest contango we've seen in quite some time. And in the past, we've seen this shape go out to the election cycle and then taper off towards the end of the year and then fall off a cliff into the new year. So it was kind of almost a bit of a plateau around the election cycle. This is not the case. This just pretty much goes straight up from here. So this is a little bit alarming. Coming into showtime now, listeners, even though we are up today, by the way, that front portion of the curve is still down. August obviously has rolled off the board, so September is now your front contract. That is down 1 point from where it was this time last week. October rolling into our analysis window here, that's also down a point. So that front portion of that curve getting depressed a little bit more, and yet the far portion, you go out to April of next year, listeners. When we kicked off the show, we were at about a 24.25 on that front SEP contract, 28.35 when you get out to April of next year. So you're talking over 4-point premium out to the latter portion of that curve. That gives me some pause. We don't see that too often, let alone to that degree, that slope, that aggressive contango out there. So clearly there is money out there pricing in some juice beyond what we're seeing in the immediate horizon here in terms of the election. So clearly there is something else afoot. There are some other shoes waiting to drop. Mr. Meatball, you were talking about this surface this week. What is catching your eye in this aggressive contango environment, sir?
I wrote about this earlier in the week on my VIX Edge blog. It is night and day between where the VIX curve is now and where it was really only a month ago. And let me see, when did I write that? I think I wrote it on Wednesday. Yeah. So we saw just some the crazy difference between where August was relative to VIX when July rolled off and where September is relative to VIX when August rolled off. So August was only trading about 2 points higher, a little over 2 points higher than the cash index when July rolled off. And when August rolled off, September was almost 4 points higher. So there is a just massive near dated contango, and then as you stated at the end of the curve, or the end of the curve is so steep, so expensive. It's really kind of fascinating to watch the move that's taken place. It is just a behemoth, that spread, and then the spread between SEP and October is wide, and then you go to October, November, that's normal, and then November on, it is super flat. This is VIX and spikes. There is just long dated. Nobody wants to sell vol. Near dated. I am seeing a ton of put volume, but also we've got this massive spread. So there's not a lot of trust in that 19 VIX that we closed at yesterday. I will say that much.
That does appear to be the case. Simon, same question for you. You obviously keep an eye on the volatility surface. Are you intrigued and or alarmed by the steep contango we're seeing out there in the VIX futures? And are you seeing a similar setup, a similarly alarming setup in the Spikes futures, sir?
Well, yes. I mean, they track very closely. So, the Spikes term structure is not different really than what we're seeing right here. I agree that I find it somewhat odd, particularly if you look at the back end of that curve. I mean, like you're talking 28.2 right now. That's pretty hefty, especially given the fact that, we really haven't had much movement in the VIX for quite some time in the actual cash index. So, it is a little bit perplexing for me. It feels like maybe the back end there is maybe a little too high.
You think? I would say so. It is way too high, but everyone is buying it, right? I know we're going to talk about the option flow here in a little bit. Our 1x5 trader, I think I'm kind of onto their hedging schedule, and I kind of get why. You can go out to February and hold VIX futures you can buy a February VIX future or a February Spikes future, hold it for 3 or 4 months and only lose a point. Whereas you buy something inside of 3 months, you're going to experience some really heavy contango losses from the hedge. So we're seeing traders go out and hedge really far dated, and trying to kind of stay out of the way of that kind of acceleration of futures decay in both spikes and in VIX. And the option flow has been following that approach as well.
Mark, if I had told you, outside of context, apropos of nothing else, if I just told you, yeah, we're going to be hanging out at record or near record out of the money call open interest in VIX options, we're going to have a degree of aggressive slope of contango and a premium to the back months in VIX futures that some might argue is extremely juicy, extremely overvalued. But either way, it's extremely bid. Oh, yeah. And also, we're coming off the heels of pretty much a protracted month-long aggressive rally in the markets. One of these things is not like the other.
Yeah.
All those data points do not jive. We are in very, very weird times, listeners. So bear that in mind when you're out there allocating your capital. Speaking of weird times, Simon, I'm glad you're on the show today, because if not, I would have to dial you up and wake you up in the far reaches of Australia. Because I'm looking here. Let's get out to the options now, listeners. Let's start in Spike's options land. And already, the ETPs have only been out for 24 hours. We're already seeing more paper flowing in, including one, Simon, I have to just pick your brain at, because let me just break down the top 5 positions in Spikes, listeners, and you'll realize exactly why in a second. Number 1, we have the SEP 28 calls. Pretty reasonable, pretty normal strike, all things considered. Number 2 and 3 are the October 180 puts and the October 140 puts. And then we saw out here a print of yesterday. We saw the 170 Nov 160 put spread going up yesterday, Simon. So Simon, what is going on with Spikes? What is up with these 100 plus point out of the money puts and put spreads going up, sir. Are you up to no good out there again, sir?
Certainly not me. It's not at all. I'm afraid that I can't really add a whole lot to that. That is bizarre.
I think bizarre is the technical term. Yeah, it looks like, listeners, we saw a put spread go up yesterday. It was the AUK 170, NOV 160. By the way, Spikes was at about 25 to 26 when these went up. Looks like they did it for, looks like $11.30. Talking all the time here on the show about extreme, obviously, out of money call prints. Very rarely do we see the flip side of that, which is the $100+ in the money put prints going up. Did you notice these this week, Mr. Meatball?
I didn't, but that is weird. I'm not 100% certain why somebody is doing that. Maybe they're, was it a close? I mean, what were they doing?
The spread was opening on both legs. I thought they might be rolling or something. No, they're just opening an AUK 170, NOV 160 put spread. Looks like they maybe paid $11.30 for the privilege.
What?
Listeners, we've been doing this show for a long time. I cannot recall seeing paper like this before. This
what?
is
I don't. What?
Exactly. My response exactly when I had to run it twice. I thought our system was broken when it showed me that earlier. I was like, that cannot be right. Go run that again, and it is right. Someone was doing that for opening business yesterday, listeners. Maybe some of our listeners are up to it. They're out there. They like to sling some spikes. Are you guys trading in the? These are, I think, definitely meet the definition of meefy, Mark. They are both beefy and meaty. The AUK puts were $144. The NOV puts were $133.
That's bananas.
That might be my favorite vol trade of the year. I love it. I love it on every level. It is absolutely redonkulous, and we are here for it all the time, listeners. So yes, that's what we're seeing. If you're tired of all us talking about crazy one par plus call strikes, probably going to talk about those more a little bit in VIX, then allow me to present Spikes and their 100+ in the money put spreads. I could spend the rest of the show talking about those. Instead, we'll keep on rolling, listeners, out to VIX options. For a day with a lot of red on the screen, we're not seeing a commensurate response out there on the VIX paper front. We're about exactly 250,000 contracts on the tape right now, which is a whole heck of a lot of nothing on a day when we're seeing some actual action out there in the major indices. The ADV is also reflecting that right now. VIX options ADV is actually exactly unched from where it was last week, which is strange. 427,000. It hasn't budged at all. We'll get into some of the flow in a second. First, let's break down. Let's see if we see any 100+ point in the money puts going up in VIX here. Let's start with the top positions, listeners. We are now hanging out 8 to 2 calls over puts. So it's no longer 10-0. There actually are some puts in the top 10 again, which is interesting. Let's see. It cost you 145,000 contracts to break into the top 10. That gets you to the SEP 30s. And again, if you like that one, enjoy it, because you're not going to get much else like that. The rest are, shall we say, more optimistic. Number 9, 152,000 of the SEP 75. So here we go, listeners. Number 8, $1.59 of the NOV 80s. Number 7, 160,000 of the SEP 50s. Number 6, $1.68 of the AUK 50s. Number 5 and 4 are 2 puts to be found this week. 182,000 of the October 20 puts and 187,000 for number 4 of the SEP 22 puts. So there are some puts starting to sneak in there, which makes sense. We were hanging out below 20, listeners. That is a pretty significant level, and yet only 2. And then number 3, we're back to the calls. The March 75s, 200,000 of those. Number 2, 203,000 of the AUK 75s. And taking the top spot yet again, listeners, kicking the AUK 75s to the number 2 spot. They are the NOV 70s, 230,000 of those bad boys. Let's run through the list here really quickly. We saw some paper earlier in the week. Later portion of the week, not so much, including today. Today, only 250,000 contracts on the tape. The most active contracts today, actually the SEP 22 puts, going back to those, about 45,000 of those, followed by number 2, 22,000 of the SEP 24s. Number 3, 19,000 of the SEP 24 puts. Number 4, 16,000 of the SEP 23 puts. And here we go. We got to go all the way on number 5 to find our fun call paper. 15,000 of the NOV pars, the NOV 100s, listeners. So there we go. Oh, and yesterday, an anemic day, only 232,000 contracts on the tape on Thursday. And yet the number one most active contract yesterday, if you said the SEP 100s, the SEP pars, you are correct. 14,000 of those going up again yesterday, followed by 10,000 of the SEP 45s, 10,000 as well of the NOV 19 puts, and then 8,000 of the SEP 22 puts and 7,500 of the OC 35. So that's it lines up 1 by 5. I'm not sure if they're doing it in SEP as well, but intriguing stuff nonetheless. Wednesday, a little bit more paper on the tape, a little bit north of 500,000, 534,000 contracts. The big dogs, such as they were on Wednesday, 34,000 of the OC 25s, 31,000 of the OC 26s, 27,000 of the SEP 21 puts, 27,000 as well of the SEP 30 calls, and rounding out the top 5 on Wednesday, 27,000 of the SEP 25s. Tuesday was the big dog day of the week. Almost 1 million contracts on the tape. Haven't seen that in a while. 936,000 contracts on the tape. So we have nearly 1 million contract day, and our ADV is unched on the week, listeners. That tells you how anemic the rest of the week was. The big dog on Tuesday, we have our old friends, the NOV 70s, going up 106,000 times, followed by the February 75s, 100,000 of those. Then we fall off a cliff. Number 3 is 41,000 of the OG 20 puts. Number 4, 41,000 as well, the SEP 21 puts. Looks like maybe a bit of a roll. And number 5, 36,000 of the NOV 80s. Got to go back to those. And then Monday, also a pretty active day, 686,000 contracts on the tape. It's like we maybe have a bit of a risk reversal going up on Monday because the big dog, 158,000 of the OC 20 puts, followed by 140,000 of the OC 50 calls. So that's an interesting way to go about it if it is a risk reversal. If you're buying call to sell put, interesting. Someone have asked about bullish risk reversals in the past. Are you selling call to buy puts, given the fact we're hanging out about 20? Maybe that makes a little more sense, but given the paper we see out there in VIX land, probably not. Number 3, 24,000 of the OC 25 puts, 22,000 of the OC 25 calls, and rounding out the top 5 on a pretty active Monday, 20,000 of the SEP 18 puts. Mr. Meatball, you mentioned our 1 by 5 friend. You say you've finally come to grips with his pattern. If you have more on that, have at it. And what else lit up your tape? Are you loving these NOV 70s this week, sir? 100,000 going up on Tuesday?
Yeah, that was against the 35 calls, I believe. That was that 1 by 5er. What this trader is doing is unloading, going out about 7 months, putting on the 1 by 5, and then when it doesn't work, we get inside and we start hitting that big slope in the curve, the trader rolls back to go back 6 months and pays a little bit for it. That has been the pattern of this trader. And, I can't disagree with the approach because obviously if we do get a full blow up, they'll be pretty happy, but they don't want to be essentially short the 35 calls with the 70s kind of not having a chance to move, or the 75s, whatever their trade is. So they're setting the duration so that those far out of the money calls maintain delta and maintain, that upside slope with the 35 calls they're selling to finance the trade. That's kind of what they're doing with this trade. Just a ton of paper. I would point out that we are seeing, the pattern is hedge long term, short the bananas out of the future near term, because all we're seeing is SEP put buyers and then long dated call buyers. That is what you see. Maybe a little OC puts too, but it's been buy the SEP 22s, buy the SEP 21s, buy the SEP 20s, buy the SEP 23s, and buy the November 70s, the December 70s, and the January, February going back. So they want long dated, way out of the money, and they want short dated puts. That has been the trade du jour just about every single day that we've been trading in volatility.
Yeah, I'm looking here. You didn't happen to remember how they put up that risk reversal. I was trying to price it up while you were talking. They went up 135 by 113,000 times on Monday, the OC 20, OC 50. Of course, exactly splitting the uprights. So it's hard to intuit from a quick glance which way they put this on here. But
when I calculated the futures, they sold put and bought call.
Okay, that's what I thought. I thought.
Yeah, because it was tied to that trade was tied to futures. I actually wrote this up on the blog. So they long a bunch of calls, short the put, and then they sold futures against the position, delta neutral. So they're essentially like, they do okay if we hang around 20, and they kill it if we blow higher. But what they don't want is a full-on vol collapse. That would be problematic for that trade.
Yeah, that would be rough. We don't see a lot of bullish risk reversals, let alone tied to futures going up. I think someone asked us about that recently, and we said, we don't see them that often for a variety of reasons. But here's one going up for size. It's a week of interesting trades. You got those funky spike put spreads, and now you got a size bullish risk reversal. Simon, we haven't had you on the show in a while for obvious reasons. You've been busy launching new products, so I haven't had a chance to pick your brain as kind of a vol product guy, and also a guy who monitors the vol space, looks at the trends and the history here. We are hanging out at some rarefied air from an overall vol options open interest perspective. Every week we come on the show, it's almost laughable now. I joke about it. We had the NOV pars this week, the NOV 70s, the SEP pars, and more NOV 70s, NOV 80s. I mean, you pick your strike. North of 100, there's open interest for days. I'm curious for you, what are your thoughts on the fact that we are seeing so much of this paper going up now? It seems like every fund and their mother has awakened to the far upside of the VIX options term structure out there. And what do you think our listeners should be reading into that, if anything, sir?
Yeah, it's quizzical for sure. I mean, I obviously don't watch this stuff as closely as you guys do, but it is really, obviously, as we mentioned earlier, it's not usually at a level that at this sort of level rather for that length of time. So I don't know. I guess as a counter, I suppose it feels to me like it's a little bit overdone. And so, from my point of view, gun to my head, I'd probably go short that, to be honest. I know that's not the way that everyone's going, but it seems to me like a little bit out of order. I'm not so sure, because I mean, you also talked about the fact earlier on the show, talking about crypto and how it could potentially sort of rally. If that were to happen, I think you might find that the back end of the term structure here in vol might just weaken a little. But that's a gut feel more than anything else.
Sounds like we have some more research to do here on the show between the correlation, especially from a vol perspective, listeners, between crypto and the major vol products out here. There could be some interesting areas to mine there, particularly as crypto gets more liquid. You can draw more meaningful correlations there, where in the past you're kind of looking at some light volume. It was kind of hard to really read between the tea leaves there. Let's keep rolling. We're already coming up against it. We had a lot of fun stuff to talk about on the show today. Really quickly, let's do our new product friends. They're not just our friend Spikey and those are the newest additions. Prior to them joining yesterday, it was our SVIX and UVIX friends out there. SVIX, of course, the inverse product, kicking off the show is at about a 13.5, down about half a point. That's a little bit lower, I believe, now. Not much paper going up on SVIX today, not even 500 contracts, and that ADV has continued to erode down to 600. So it seems like folks, go figure, in a period where VIX is dipping below 20, are suddenly not excited by an inverse VIX ETP. And then let's go out to UVIX, which is, of course, the levered VIX product. That was about a 940 when we kicked off the show, up about 7/10 of a point from where it was this time last week. Actually seeing some paper out there today, though. This is one we've talked about. Seems like this one is catching hold with people while SVIX kind of continues to languish. It's weirdly enough, the ADV is 4,300, so it's down about 500, so that's not looking good. But today, we've already seen 12,000 contracts on the tape today. So UVIX trading up a storm today, and it's not all stuff going out today. It's actually, looks like I'm looking at it now, the big prints, there's 5,600 total. It was like 2,800 each leg of the SEP 810 put spread. That's the big trade out there today. So you're talking nearly half of that volume going up in SEP, not even a closing or a rolling type trade. So yeah, looks like people are discovering themselves a little bit of UVIX, not so much SVIX. Simon, again, you're our product guy. Haven't had a chance to talk to you in a while. I don't think we had a chance to talk to you since these products launched. What are your thoughts on SVIX, the inverse product, and UVIX, the levered product, particularly now that you have some skin in that game with a levered ETP of your own, sir?
Yeah, they're totally different in terms of the order of magnitude, though, for sure. This here is certainly not for the faint-hearted, this kind of product. So, I mean, I think it certainly has a place as you can tell. I mean, so many people are interested in it, and they always have been. These products, even before 2018, were very, very popular. So it doesn't surprise me at all. Our profile doesn't jibe with this, though. I mean, we've taken a much more cautious approach than that. But certainly there is a place for this stuff, absolutely. I mean, you wouldn't see the kinds of volumes that you've got there unless people were genuinely interested in it. So long may it live.
I'm disappointed, Simon, you didn't launch with the inverse spikes out of the gate, sir. You got to come out swinging. Just come out with the most contentious product you possibly can at the start of the product launch. That's how you make friends and influence the regulators out there. So, yeah, interesting stuff. Mr. Meatball, anything going on over there in your neck of the woods for your pit crazies? Looks like not so much SVIX this week. It continues to languish. With UVIX putting up some numbers there. What are your thoughts?
Yeah, that product has really become really viable. Markets are tight. Option markets are tight. You can do essentially what you want in and out on that thing pretty cheaply. Not a massive bid-ask spread. It's got weeklies now. It is a pretty robust product now, and I really enjoy watching it and playing with it. And it is. Slowly, if you look at the stats, the volume has been growing there every single day, and it has been at the loss of UVXY, which it has seen its ADV, average daily volume in the ETFs, fall a little bit, while UVIX has been going up and up and up. So, pretty exciting.
Yeah, we'll skip over VXX. Not too much exciting happening out there. Only 23,000 contracts on the tape today. So we'll move on from VXX. UVXY, you just mentioned this. We'll hit on that really quickly. 880 when we kicked off the show, down a whopping 1.6 points from where it was this time last week. Looks like it has ticked back up now. It's 943. So it has gained some of that back here. So maybe they don't need to reverse split yet. Maybe the market will do it before them. We'll see. But ADV, as Mr. Meatball mentioned, has been beaten up. It's finally starting to get a little bit of its shine back this week. It's up about 11,000 to 284,000. And today, a good reason why, 317,000 contracts already on the tape out there today. By the way, the big dog, the AUG16 puts 109,000 of those bad boys open in UVXY. So interesting stuff there. In terms of action today, this is kind of what I expected when I saw the big numbers for UVIX, which is all stuff pretty much going out around the strike today. 40,000 of the AUG9 halves, 28,000 of the AUG9s, 26,000 of the AUG9 puts, and 15,000 of the AUG9 half puts. That's all kind of what I expected in UVIX, which was kind of surprising to me that it was all September instead, which is interesting. So a lot of paper going up in UVXY today. A lot of earnings going up. We talked about those already this week. Matt was on the advisor's option. We talked about it on the option block yesterday. Check out the latest data for yourselves if you want, listeners over there. TheOptionsInsider.com is the place to go to get access to it all completely for free because we love you folks. As we keep on rolling, let's get some of you folks on the show now. It's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the OptionsInsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins, ask us questions. We often turn the spotlight back on you like we are doing right now. First, I'll pay off last week. We asked you a Vol question last week. Said Vol has many different causes. However, which of the following factors do you feel is the primary driver of the current Vol environment? And 62.5% of you chose the Fed. Fed blew the doors off everything else. 25% for other, a disappointing input on what the other actually was. We want to hear what your other is. And then 8.3% said earnings season, 4.2% saying Ukraine. So Fed kind of leading the dance as I expected, but still pretty strong numbers there. This week, we're going back to the vol well yet again. VIX and spikes were back below 20 when we posted this on Monday. Is this the beginning of a new vol regime or just a blip on the radar? Quite simply, will VIX still be below 20 at the end of Q3? So the end of September, listeners. Gave you three choices, yes, no, and the infamous third, which is VIX is confusing. this week. Let's go out to Simon first. Simon, I'm curious for your thoughts. Obviously, we were just talking about the vol surface earlier on the show. They're pricing in a heck of a lot more juice going forward. What do you think for the end of Q3? You think we're above or below 20? And then more importantly, what do you think our audience is voting for, sir?
Oh, okay. So I'm certainly above. And I just think that time of year is kind of synonymous with things going wrong, so that happens more frequently than you would imagine. And so therefore, I think that it'll be higher for sure.
Interesting. Mr. Meatball, do you agree with that, or are you going to take the counterpoint?
Well, the audience is definitely going to say higher. At the end of Q3, so we're talking September 30th, higher than 2063. Sure, why not? Let's go for it.
All right. Well, our audience agrees with both of you. 68.2% right now saying no, VIX will not be back below 20, or not still be below 20, I guess, by the end of Q3. Only 17.3% of you saying yes, it will be below 20. And 14.5% of you say VIX is confusing. Given all the weird stuff we laid down on the show today, listeners, I'm surprised that number isn't higher. Let's see. Let's go really quickly here. Let's go to Mads really quickly. An interesting theoretical question, then we'll get to the crystal ball. Mads says, so VVIX is historically low right now. What do I do with that? It's an interesting question. Simon, we've been talking on the show, not so much this week. It has become elevated again, but VSPKEX was just at an all-time low just a couple of weeks ago. VVIX was starting to flirt with a 70 handle again, every so briefly. We haven't seen that since the start of the pandemic. So we were kind of in some interesting rarefied air from a vol perspective. Mads wants to know, he sees that data, he hears us talk about it on the show. What should he do with that? How should he use that data, Simon?
Oh, this is a really challenging sort of environment that we've got here with the shape of the term structure, how steep it is at the back, and so on. So I don't know. This is one thing where I guess I'm not really strong in terms of my opinion on this, but I do think that the vol, well, obviously the back end of the curve is pricing in a lot. They're saying the VVIX has come down. Yeah, I guess I expect that the vol should probably rise as we head into the coming months.
Mr. Meatball, what are your thoughts here for Mr. Mads? He wants to know, when he hears things like VVIX and VSPKEX are looking at quite low levels, and for the case of VSPKEX, an all-time low, what should he do with that info, sir?
Well, I don't even know what the VSPKEX is. I've never heard of the VSPKEX.
I apologize. The Vikings, sir. Cousin to Spikey.
The Spikey Viking. The spiking. That'll be what the index is for Spikey. I wouldn't say that VVIX was historically low. Maybe over the last 2 years. And Viking hasn't been around long enough, but Viking's going to correlate really well to the VVIX. And, people forget that where was the VVIX in 2015, Mark? 60? 65? Vol was just ridiculously cheap. And it can go lower. It can go a lot lower than you think. It's actually been really high for the last 2 years. So I don't know, I don't really get excited about putting up like big back spreads and things like that until, we see the Viking and VVIX into the low 70s. Then we'll start talking about how to set up some really cool hedges.
We hit a 68 in May of 2014, 66. That was a pretty quick low, though. We got to bounce right off. Actually hit a 61 on May 9th of 2014, and then it shot right back up. And that's kind of about, other than that, it's usually around a 75 is kind of the low for out there. But yeah, intriguing stuff. Yeah, it's something to definitely watch, Mads. Good question. We have been talking about it on the show for a while now. We'll see if we're kind of getting a little bit more elevated again. That's what we said when we start dipping into the 70s. You probably can expect that, but we can go lower on weird, aberrant occasions, so it certainly is an interesting indicator. So many interesting things to watch in the vol space. That's why you got to tune into this show every week, and that's why you have to tune into the final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Wow. I'm just going to say it right now. Crystal ball, of course, welcome to the portion of the show where we try to wrestle with the vol gods. And we've been hitting a lot of bullseyes of late, listeners. It's been a good string on the show. I hit one, Meatball hit one, a couple of guests, Russell and Matt hit them. And now I'm back, listeners. We're at about a 20 3/4, pretty much exactly 2076 in VIX. Spikes at a 2104. And I was at a 2075, listeners. I am literally 0.01 away. I will give myself a winner chicken dinner for that one. You can't really, in the weird, whimsical world of vol, it is difficult to get it exactly on the dot. That's about as close as you can get. So I will give myself a bullseye. That's growing my tally on the year, listeners. It's getting good. When we count up the numbers at the end of the year, it's going to be looking good for me. Now I have to compete with the guests because the guests have gotten some bullseyes of late, and they're starting to drive that guest total higher. So 2075 for me, looking like a winner chicken dinner. Mr. Tom was at a 20. No joy for him. Mr. Meatball going palindromic as usual, 1818. An interesting historical year, not so much from a vol level this week. So yeah, wow. Bullseye for me. I'm just going to bask in that. I didn't have to claim it at the beginning of the show. I waited all the way to the end of the show like a good host, listeners. And it was right there waiting for me when the show is over. So I will take that. And it's a challenging vol year. A bullseye always warms the old cockles of the hearts. But you know what? Charitable fellow that I am, Simon, our guests have been doing pretty well as well. And you haven't been on in a while. So I will give you now the dubious honor of going first, sir. What are you feeling for spikes this time next week?
This is a very confused map here. It looks like a dog's breakfast. I'm going to say 23. So I think it's going to be
23 even. Getting a little bit more juice out there for Mr. Simon. 23 even. Mr. Meatball, I know you've been your gears have been spinning as we're talking here, trying to find the palindromic number that equates to your vol sentiment. What do you have for us this week, sir?
2002.
2002. So you're going the other way. You think we're going right back down to the 20 handle again. Interesting.
Yeah, well, it was 2002 or I was debating between 2002, 2112 or 2222, and Simon went a little high, so I decided to go a little low.
2112, an interesting album. I'm not sure about a vol level, but we shall see. We shall see, listeners. 2002 for the Meatball, 23 for Simon. Now, of course, the prognostication you've been waiting for. Just the bullseyes flying fast and furious here. I can't even contain them myself, listeners. So what do we got on the tape for this week? Are we going lower? Flirted with below the 20 handle for a lot of the week, actually. We were below the 20 handle for the most of the week here before we finally got back to my level here at the end of the week. I have a feeling we might see something along those lines play out a little bit. Might see a little bit of vol coming off, even going into the weekend today, and then coming into the beginning of next week before we see some vol trickling in. Will we get to Simon's level of a 23? That's an interesting question. That's interesting. I don't know if we're going to quite get there, but I think more vol is the order of the day. I like where I am this week, but I want a little bit more juice. I'm going to say, bam, 2175. So there's our market this week, listeners. Meatball, 2002, palindromic as usual. Simon on the upside at 23. And then, of course, the Goldilocks, the bullseye, 2175. All right, listeners, that music means we've come to the end of another epic journey through the world of volatility. I want to thank all of you out there who've joined us throughout the week. If you're one of our growing legion of on-demand listeners, this will conclude your broadcast week. Thank you for joining us. Of course, if you want more in your lives, theoptioninsider.com/pro. We'll be back in a little bit with Saad from Shift Search to break down a crazy week in options activity. You got Man U, you got Bed Bath & Beyond. Who knows what that's going to make on the tape? Was there weird paper afoot? Yes, there was. Theoptionsinsider.com/pro if you want to hear us break it down after this show. And Mr. Simon, I'm glad you could wake up early to join us here. Congratulations yet again on the long-delayed, much-anticipated launch of your new products. For our listeners that have been listening to this show the whole hour and they want to go learn more about Spikey and its brethren, where should they go? What should they do, sir?
There's only one place to go. It's convexityshares.com.
There you go. Convexityshares.com is the place to go to learn more. He hinted maybe we're going to see those options sooner rather than later. So hold off on your emails and your questions to us. hopefully we'll see them pretty soon. Also, you can check out all of Simon's other products. He does do other things, interesting things, crypto, of course, more data on spikes, VSPKEX at T3 Index. So that's T, then the number 3 index.com is the place to go to learn more about that. And Mr. Meatball, if folks want to check out, you're talking about breaking down some of the trades out there and VIX options, they want to check out your blog and everything else, where should they go? What should they do, sir?
Yeah, I'm writing information on VIX and spikes and all things volatility every single day at optionpit.com. Go to optionpit.com and check out my blog, the VIX Edge, and the Pit Report. I write those every day. Worth your time. Give them a read.
He spends the time writing them. You might as well read them, listeners, at optionpit.com is the place to go. We got to get on out of here. For all of you out there, join us this week. Thanks again. This will conclude your broadcast week. Have a great, safe weekend. We'll see you back here on Monday, of course, to commence our fun network programming, battling once again for the epic Sergeant Slaughter figure on the option block, all the way through to Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.